You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to this fantastic episode of the Whole Truth podcast. I'm Paul Armstrong. I've just had a chat with Bill Beament. He's the Managing Director of Develop. You would know Bill. He forged his reputation as the MD of Northern Star Resources, turning that into a highly successful gold miner on the back of a combination of exploration, acquisitions and great project management. He's now applying his skills along with his team to a couple of projects in Australia. First and foremost, the Woodlawn copper zinc project in New South Wales. Bill says the project is set for production and cash flow in the coming quarter. He's been quite quiet by his usual standards, but as you'll hear on this episode of the podcast, he's been very busy below the waterline. He's de-risked this project to an incredible degree. I think in terms of what you can do to a project to ensure nothing goes wrong, Bill's done it. He's also talking about selling a stake of the project to recycle some of the capital into the Sulphur Springs base metals project in the Pilbara. That project has been seen as not one of the best things in Australian mining in recent years. Bill says it's a golden opportunity that's been overlooked, and that's the opportunity for developed shareholders. And he's about to prove yet again that he's right and the pundits are wrong. Have a listen to what Bill's got to say about Woodlawn. The company is right on the cusp of production and cash flow, what that means for development of Sulphur Springs, and he also gives us some great insights into the Bellevue gold project. Develop is the contractor at Bellevue, and Bill's just spent 2 days on site. He says he thinks they've turned the corner well and truly. The tonnages are really climbing, the developed meters are growing, and he says Bellevue is on a winner. Have a listen to what he's got to say. He's always great value. He's one of the most highly regarded blokes in the industry with good reason. Bill, you've been very quiet in the past 12 months by your usual standards. I mean, normally we see and hear a lot more from you in the public domain. What's been keeping you busy?
I'd say it's probably 2 years, Paul, to be honest. But no, look, we've just been head down, backside up, and building, I guess, a couple of key pillars of our business, both mining services and probably very importantly is our mine ownership, in particular Woodlawn.
Now, when you left Northern Star, people expected you to go into Develop and really take it by the horns and go for it. You did initially. You acquired the Woodlawn copper zinc project in New South Wales. You started advancing the Sulphur Springs base metals project in Western Australia. But then things, by your usual standards, as I say, went a bit quiet. You've obviously been very busy below the waterline. Then suddenly, last week, you come out with a quarterly report that says you're just about to start production and cash flow at Woodlawn. So you've obviously been going hard at it behind the scenes.
Oh, look, we might be quiet on a marketing and a market sense, but from a business sense, we've never worked harder than probably in the last 10, 15 years, to be honest. So behind the scenes, we picked up an asset, Woodlawn. It's only been 2.5 years. We picked it up, fantastic asset in the sense of, infrastructure was basically brand new from the previous owners. They went in administration and commissioning. So brand new infrastructure, but, and great geology, but didn't have a long mine life associated with that mine plan. So for us, that 2.5 years was, getting there, excavating drill platforms so we could drill to improve mine lives. So you got to understand that takes time to excavate a drive, then you got to put the drills in there for 13 months to drill. We grew those resources and reserves substantially. That goes into a mine plan. I could have taken the traditional route of, hey, let's go and raise $200 million and dilute the hell out of shareholders and do that. Probably not any quicker, but we took a systematic approach there. Done it off our balance sheet, created our mining services, which helped fund that as well. And we obviously, generated a new mine plan last year that we could then fund off, debt fund, where we're not diluting shareholders.
Let's have a look at Woodlawn, because Develop very much at the moment is about Woodlawn, at least for the short to medium term here. Now, you acquired Woodlawn out of an administration process, didn't you? It was already an existing project, had a plant. People sort of looked at you and said, why are you buying that? It had been for sale for quite a while, but you did take a different approach to it.
Yeah, look, it wasn't for sale for long, to be honest. We literally, the senior debt holder, Orion, we had a very long relationship with. They were very interested in our Sulphur Springs project. So they actually offered it to us. We weren't actually in the process. They gave me a call and said, look, we want to do business with you. You need to look at this. And very quickly we got exclusivity. So it wasn't very long. In fact, no one actually went to site because of COVID. So we were the first people to go to site. And once you went to site, it was pretty easy to pick up how good the quality of the asset was.
So it begs the question, as always with these things, Bill, if it's so good, how did it end up in administration?
Yeah, look, it's a bit of a beer conversation, but, flawed operating plan from the start. Their overall strategy was to retreat the historical tailings, which there is a big resource and reserve still there. Retreat that, build a new underground, and that will be the high-grade baseload feed for a brand new processing plant. Mix them all together and produce this magical amount of metal. But look, obviously execution of that was pretty poor, to be quite honest. Probably chose the wrong contractor to build the mill. That was 9 months overdue. The underground took longer to build. Literally, when they went in administration, they were in the top of the Kate lens, which is our first lens, 25 metres in. COVID hit. All the process operators were contract Primero, WA, run out of working capital. So a combination of errors. Probably if they went for another 4 or 5 months, the copper and zinc price kicked up. They'd still be going now.
Right. So, but conventionally, people would buy an asset like this. Companies would buy this sort of asset and say, hey, it's all ready to go. It has been going. We're going to turn it back on. You've done nothing of that sort, have you? As you say, you spent 2.5 years working furiously at the site, no production.
Yeah, look, and very deliberate for a couple of strategic reasons and a couple of sensible reasons. Look, this is, I think, the 15th mine I've bought in the space of a 13-year period, so I don't have an obsession buying mines, but, when you see a great asset, I've bought a lot of mines that have already been operating. That's a very different story to something that's on care and maintenance, or you got to build something. You want to turn these things on when you've dotted the I's and crossed the T's. So it's very different when you buy an operating asset. You can see it in the flesh. You've got a team and it's operating, and you can just get in there and invest capital or lower costs, or put some high performing talent there and speed things up and produce more metal. But when it's in care and maintenance like this, I've got a bit of a rule. Operating asset, if I buy it, probably need a 2-year mine life on paper. If I've got something I'm going to build, the rule is probably 7 to 10 year mine life. I'm talking proper mine life. If it's on care and maintenance and you got to recommission it, it's that 5 years. Now, we had a 3-year mine life on this. So that's risky. That means you get in production, and the companies do this time and time again. They rush into production. They undercapitalise themselves. They don't have a lot of mine life. They haven't got development in front of production, and all of a sudden, they get tight, and then the mill's chasing them, and then they run out of ore, and the banks are on their ass and all that sort of stuff. So for me, very deliberate to invest heavily in the asset to de-risk it. And we got to a point where we couldn't de-risk it anymore. We grew the mine lives, we took it from basically a 3-year underground life to a 10-year underground life. So big step change. We did that with very little drilling, so I can't wait to put the drills in July back into Woodlawn. We obviously redesigned, and we had 41 iterations of the mine plan, which you don't do when you're in production. So when you're not in production, you can actually optimise, schedule, redesign 41 iterations, which is extraordinary to get the best outcome. So when we do turn it on, we know that our schedule is right and our plan.
So you're right on the cusp of all this work culminating in the start of production and cash flow. You've been working underground, developing it, drilling it, doing the mine plan. You're now, as you said recently, 70% of the way through the plant refurb. It's all the planets are lining up for this production come sort of June, thereabouts. It's really going to be the culmination of 2.5 years of work, at which point people might say, well, what's Bill been doing for 2.5 years? They're about to see the fruits of your labour.
Yeah, look, I was on site less than 2 weeks ago, and I'm back there next week for a few more days. And as one of my colleagues said over there, we can just about taste production. And you literally can on site.
And you've taken a few investors and analysts, fund managers to site in recent times?
Yeah, look, back end of last year, we took some investors and current shareholders.
Were they surprised by the what you had on your hands, the progress you'd made, how ready it was?
Yeah, very deliberate. This is probably the vast majority we took a year prior. To see the delta and the difference just before Christmas was extraordinary. And we got great feedback from all those investors and the broking house that took us there that will help put it together. So, and I've done 3 trips now in 6 weeks and do another one next week. As I said, the step change I see week on week is extraordinary. The team over there has done an amazing job putting it all together. Like, the mining's the easiest part. We already de-risked the mining in 2023 because we did all the capital development for the first 2 years of production. So what that means is we pushed the decline down below the bottom of the ore body. We strike drived across every level of that first 2 years of production, established stockpiles, ventilation, pumping, power, the critical backbone of the mine. is all installed, and then we push the decline another 100 vertical metres past the first 2 years production. And we're already cutting now the levels into years 3, 5 and 6 production. So that's extraordinary.
So you developed this project a long way ahead of schedule.
Oh, we're well advanced, and we're just de-risking it because we're taking on debt so we don't dilute shareholders, because we can dilute shareholders and I can create a $3 billion company, but we still sit at $2.50 a share. That's not much fun for anyone involved, including myself. So, we're taking on debt. We had to debt finance it. So for us to debt finance, we de-risked it on an operational front with the capital, drilling, mine life, new mine plan. Obviously going to the banks with a new mine plan with a big reserve and big life means we get 100.
So this is about as low a risk mining proposition as you could come up with.
Yeah, well, like you said earlier on, I've been quiet. It's just I've been quiet to, just head down and get it in production. And I think people will see the fruits of that work June quarter onwards.
So you're right on the cusp of this production startup. What does develop look like once this thing hits its straps?
Look, we got a conservative ramp up. Our schedule had us not even going full scale in the mill until late October, November. I think it's very conservative. We know the mine plan is there. I've already got 30,000 tonne of ore sitting on the ROM pad right now. And we're only just doing development. We start production later on the end of this month from a mining perspective. So the mine plan is really robust. We know it can deliver more than what the mill can take. We have dialed that back. And because we've done all this development so far advanced, some of these levels we've got a 300,000 tonne of stope dirt on it. That's half a year's stope dirt on one level. This is a big ore body. So for us, we've got a conservative ramp up, but the business radically changes in my view from mid this year. We'll be well and truly have concentrate and cash flow. And to put in perspective, the first 3 years of this project, once we get up to steady state, at spot prices, there's around 450 mil of free cash flow. First 3 years. That's crazy. I think our enterprise value at the moment is only around about 550. Probably, Woodlawn's probably got an enterprise value of 300.
So it screams share price re-rate.
Yeah.
As the market gets its head around what's going to happen and sees the metal coming out the other end.
Look, if you look at analysts and what they're pitching at the value of Woodlawn and our overall stock price, it's trading at 2 times cash flow. That's just crazy.
So that brings us to the question that you've sort of hedged around a little bit about the sale of or potential sale of a stake in it. You've mentioned that you open to selling 20% of Woodlawn at the asset level. Will you wait until these valuations and appreciations get to what you think are more realistic levels before you transact?
Oh, look, these people that we've engaged with, and we've got a really good list of potential people who are in the data room. I've done 2 site visits with one party already. I've got another site visit with another conglomerate next week. These are household names that take minority stakes all across the globe in every single commodity that you can imagine. So they do this every day of the week. They don't buy at a stock price. It's not that. They buy at a project level and asset level valuation. Very different to an investor. So they take a longer term approach. And it's like anything, when these assets come up, you find out the true value of things when you actually put it out to an open tender process. So very reputable mobs, great balance sheets, amazing. Either or a couple of these would be an amazing partner for us.
Do you expect you will do a deal, or are you sort of nonchalant either way?
Well, look, we only started the process late last year. Again, great interest from, like say, one party already 2 site visits. Obviously trying to front run the process, so that gives you an indication.
So they're taking it seriously, yep.
Full DD team was there late last year. So look, a lot of interest. We're running a coordinated process with HSBC. Look, point one, obviously if we don't get the price that we think it's worth, then obviously not going to sell. Because like I say, when it's spitting out 150 mil a year free cash flow, we're not going to give it away. But the logical question and the thing is, well, why sell up to 20%? Well, purely because I want to recycle a chunk of that capital back into my business. I think I've got a very good track record of return on equity and return on invested capital, probably one of the best in the last 12, 13 years. I want to recycle some of that capital back into my existing portfolio, in particular Sulphur Springs.
So that brings us to Sulphur Springs up in the Pilbara here. That was the core asset when you moved into develop. It's been seen as a bit of an asset that's, not quite there. You took a different view of it when you moved into develop and invested your own money into the company. You said at the time that you thought it was a great asset, was underappreciated. Do you still see it that way?
Yeah, look, it gets been a bit lost in our portfolio, but it is the original asset where I first announced a $38 million package, and a lot of that was my money going into the business. So that's how much I rate the asset. But again, it's no different to the other 14 mines and assets that I've bought in my career. Everyone's had an opinion of them, but not one's been proven right. So every asset I've bought.
So you're not interested in what everyone else has to say. Fair enough. What do you make of it?
Yeah, well, look, you got to get through the noise. Like, it had some stigma associated with a couple of points. We solved all that. Permitting was one. It's fully permitted. Shovel ready. We can start a mine tomorrow. Just got to need the CapEx. So done. Second point, we're not mining the oxide and transitional, which was the first 5 years of the mine plan. We're going completely underground, fresh rock, metallurgy 101. Very simple. No on recoveries.
So similar to what you've done at Woodlawn, you started with a blank canvas. You questioned every assumption.
Correct.
And you've rebuilt the whole model and the plan.
And the third part with there was obviously it didn't have the completed drilling to get the reserves in the right classification, resource in the right classification, and then a mine plan that you can fund. So, and it was in a $30 million company, and you got a capex of 300. So, that's the death spiral of any project, regardless of commodity type. So, we debunked all them. We spent $15 million to wrap that up in mid-23 into a DFS. It is a great project. It's a better ore body than Woodlawn. It is a much better ore body than Woodlawn. It's just zinc and copper. It's 2-stage flotation. Woodlawn's a 4-stage float. It's a VMS. So very, very simple processing from a base metal perspective. It's a bigger ore body, so it'll have better tonnage of metal per annum. If that was built now at spot prices, and we shouldn't forget that spot copper and zinc, as of today, best it's been in 3 years. Best since I bought these assets in Aussie dollar terms. So, if Sulphur Springs was built today, be making 250 mil free cash flow a year.
So that therefore takes us to the question: what happens next?
So look, we're pretty aggressive on Sulphur Springs. So at the moment, the tech services team just finishing off all the mine plans and hand over to the operational team at Woodlawn. That's really important. We don't want to stuff that up. They're switching to the new mine plan of Sulphur Springs. So we'll update that mine plan. Why are we updating that? Because we are going to start the underground capital development, the declines. We'll start that in mid this year. And we're going to push those declines down to the bottom of the known ore body. Again, we've only drilled this thing down to 350 vertical metres. We put a $30 million decline down to 300. It takes 14, 15 months. When we get that down to the bottom of the ore body, we've got 10 million tonnes, 8-year mine plan above us from an underground, which is unheard of. No one gets that. You have to go to a mountain in Canada and the ore body sits in the mountain, you go in at the valley and you got 10 million tonne above it. It's just unheard of to get that in an underground sense. So we're excited about that because obviously if we get to the bottom of the ore body, guess what? I can put in a big drill drive and I can drill the next 5 to 7 year mine plan because up there I can't drill anymore. I've got cliff faces on the surface.
So is a exploration drive, a decline, the next key thing for this project?
Yeah, look, it's not really exploration. We are literally putting in the permanent infrastructure. So we'll put in the underground declines, the ventilation circuit, pumping power, all that. We'll put that to the bottom of the mine. Like it's $30 million.
So when could we expect to see that sort of activity, earth being broken up there?
July. We'll start the haul road in May. So we're going to connect the existing haul roads, about another 10 Ks to do. We'll start that in May and start the decline in mid-year. So a lot of activity there. In conjunction, we don't want this to hold us up, is we will start middle of this year as well. It takes about 6 months and another $1 million, is we'll get GR Engineering. We really love what they've done over at Woodlawn and what they've been doing. We'll get them to do the final engineering and flow sheet drawings. Takes about 6 months so that we can, if we need to and want to, we can roll straight into the construction of a processing plant. So ideal world, and this is where the 20% of Woodlawn comes into it. If we sell 20% of Woodlawn, then we will build a processing plant early next year, start construction of that up at Sulphur Springs. So again, but if we don't sell 20%, then it probably gets pushed out 18 months. So this is, why I want to reinvest that capital because if I get it,
that will unlock the value of Sulphur Springs in a much more expedited fashion.
Well, if I get it built in 3 years' time, we're knocking out 400 mil free cash flow a year.
Now you mentioned you're going to swing some people, your tech team, over from Woodlawn to Sulphur Springs, Bill, which goes back to one of the original strategies you talked about when you first brought in to develop, and that is mobilisation of people and human resources. So you can apply the people that you've used at Woodlawn, they move to your next project, bit like the bigger mining houses do, onto Sulphur Springs. But you've got a similar concept with the people within the mining services division, more conventionally known as contracting, if in simple terms. So you've always had a view you can swing them between a contract operation and a develop owner-operator.
Yeah, look, absolutely. And that was, when I did do marketing and showed what we're doing in the mining services, I said it was a critical component of our business because we need them to build and operate in the mine. So a chemistry set can get built. Everyone can build a chemistry set. They can process and do X, Y, Z. But unless you got the ore sitting on the ROM pad to process, then you don't have a mine. So you need really efficient and effective mining teams and technical teams to deliver that. Otherwise, you come unstuck. And there's plenty of mines that come unstuck because they just don't get the tons out of the hole. Very different open pitch. You can throw another digger and another set of trucks. Underground, you can't. You're in a car park. There's only one car park, so you can only fit one bit of kit there. So for me, yeah, we've redirected. Like last year, we had a couple of small mining services contracts complete. We redirected that talent at Bellevue and also, very importantly, over at Woodlawn. So, to give you an example, we only kicked off mining last month at Woodlawn. Our development jumbo got 351 metres, and the first 2 weeks was inductions. This month we're tracking for 500 metres with one jumbo, which is just crazy industry, sort of above industry standards. So again, redirecting that high performing talent from management down to operators means that we can build our own mines really, really efficiently and effectively and get ahead of the curve. So we'll continue to do that. So the team going over Woodlawn, there is probably half of it's from WA. We'll get that up and running and get it in a steady state. Then obviously we'll drag those people back and probably some of them will go up to Sulphur Springs mid-year.
And are you putting your hand up for any more contracting work?
Look, we're concentrating on Woodlawn. That is a huge chunk of our time and management time because it's so important. Because every dollar we make in mine services, we make 10 on mine ownership. So, and it's the same people. It's the same time from me, same time with the miners. It's the same skill set. So for us, we've got to balance that. But we really want to bloody, focus on Bellevue, ramp that up, and we can talk about that in a minute. But, huge focus to get that steady state and get them plus 200,000 ounces. So we don't want to distract that. It's a big job, very important job for them, and obviously very important job for us. So we want to, don't want to get distracted other than Woodlawn and Bellevue. That said, by mid-year we think that's well and truly, up and running on all fronts. We have said that we'd love to get some more work in mining services mid-year onwards. Look, if our past clients like, Beta Hunt or Mount Marion picked the phone up and said, come back, yeah, we'd go back tomorrow. But new clients, I doubt we'd start anything until post mid-year.
Bill, so it's clear, going back to our start of this conversation, that you have been very busy below the waterline. It's just a question of people might not have seen it. That's all about to change, isn't it? This company is now in one of those great transition zones.
Oh, look, absolutely. And I think you've seen that with the level of interest from fund managers in our shares. I think we're $2 a share only a month ago, and we're now building up 250 plus and getting volume into our stock. And like I've literally had probably 10 or 12 fund managers come to my office out of Sydney from the last 2 days. So the level of interest is escalating.
And the analysts are starting to see it, aren't they? There's some much bigger price targets on the stock.
Yeah, look, absolutely. Again, I haven't marketed the company because it's just been too busy de-risking it and building it, because I know once numbers will always do the talking. So if we deliver, under-promise, over-deliver, deliver the numbers we think internally what this business can generate, then the share price comes rocketing with it, and we just need to deliver. So for me, like people are starting to smell that now, and as I said earlier on, as one of my colleagues said, we can taste production. You can very much taste production at Woodlawn, and we might even surprise you.
It sounds like you're in a fantastic position, Bill. All the hard work's about to come flowing through. I think the market will probably start to get its head around what you've been doing for the past 2 odd years out at Woodlawn, and also see the value that is sitting there in Sulphur Springs. I'm sure you would agree that Sulphur Springs probably doesn't get the appreciation in the market that it deserves, but there's the upside and the opportunity for investors.
Yeah, look, absolutely. And once we start pushing the button on the ground in Sulphur Springs and update mine plans and all that sort of stuff, people will realise that that's actually a fantastic asset. And obviously if we crystallise 20%, we're pushing the button on that and all of a sudden it becomes real.
Now, Bill, we've been talking about mining services. Obviously, Bellevue is your biggest contract in that division. Bellevue's been in the headlights lately. They've had to announce a few changes. but they can now show that the project is starting to really get some momentum behind it. What do you think of the situation there?
Oh, look, it's last year was it was a bit of a slog to get through, but nothing's changed from what they did in July. They raised money to grow the business and grow the mine plan and grow the production at Bellevue. It's all on track. It takes time. The critical infrastructure of the mine really got finished last quarter, in the December quarter. It's hard to operate when you don't have the full runway of to be able to do activity, but well and truly turned the corner there. December quarter, we were up in development meters 10%, quarter on quarter from September to December. Most of that come in the month of December. We went from mid-year, 900 metres of jumbo development a month. And this is critical because you've got to get the development in to open up the mine and then open up the production sources, and then more production equals more ounces. We went from 900 metres a month to 1,403 in December. And we've just finished January and we got 1,713 metres.
That's a critical statistic, isn't it, Bill? Because Bellevue's made it clear that the challenges it's faced with production is about development metres and tonnages out of the mine. It's not the usual things that bring a mine unstuck, like the ore body's not reconciling, the metallurgy's not working. That's all going to plan. The challenge is developing the mine faster and getting more tons out.
Yeah, look, absolutely. The gold's in the ground. You can see it in the drilling and their results. I'd love to own a mine that had gold drill results like that. It's fantastic. So the gold's in the ground, process plant's going really well, and they're getting great recoveries. So it's all set up. I do think it's well and truly turned the corner. They put their guidance out. It's their mine, so I'll leave them to them, but I'm really comfortable. I just spent 2 days up there last week and really excited how that's going, and the gold really does start pouring out later on this half, and at this gold price and their grade and production profile, they're going to make a lot of money, and you've seen that reflect. I think smart people are now heading them. They've gone from $1 to $1.25, $1.30 in the space of about 3 weeks. So I think people are starting to work out that they're heading on the downhill slope now.
It's going to be a fascinating 6 months. Bill, thanks very much for your time.
Thanks, guys.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.